flow strategy. Now, cash flow basically means that you buy a property, you put a tenant in there, the tenant rents from you, and you get money on a monthly basis. Now, the key for this strategy to work is that your monthly expenses need to be lower than your rental income. As you can see here, if I've got this orange property and it's renting out for 10,000 Rand per month, and I'm achieving only a 7,000 Rand expense on this property, it means that every month I'm making 3,000 Rand profit. Now, you can either increase your cash flow by increasing the income or reducing the expenses. Now, for this specific reason, I've decided to adapt my strategy slightly and to target multi-lets. Now, a buy-to-let is when you have one property with one tenant. A multi-let is when you have one property with multiple tenants. So let me show you a quick example. This was the first multi-let that I ever bought. It's a 14-bedroom flat in Rosettenville, which is in Joburg South. I found it on private property, and the asking price was 1.8 million. I was able to negotiate them down to 1.35. So what you'll notice here is that the first step is you've got to buy your discount, which I was lucky enough to do. The second is there are 7 different units in this multi-let, which is quite important. I don't like a property where you have one property and you have a person in one room and then another person in another room, etc. What I like about the Rosettenville market is that you've got a bathroom, a lounge, and 2 bedrooms separate in a unit, and then you've got another unit that is completely separate. So you can have little families, and you can have people come and live and create a long-term plan to living in your house. So here's an example of what it looks like. Right, these are the bedrooms of one of the units. This is the kitchen and the bathroom. So you can see these are really well-maintained, professional, clean. And they're not necessarily fancy, but they're functional, and that's what's really important. Now, here is some of the rental information. So there's a 1-bedroom on the ground floor going for 3,000. There's a 3-bedroom going for 4,200, and then there are another 5 2-bedrooms. This property on its own generates a total of 27,545 Rand rent. So let's have a look at the numbers. Right, so the monthly rental of 27,500 comes in every month. And then I've got numerous expenses. For example, the monthly bond. Now, I was able to approach an investor with my professionally designed investor proposal. And this investor loaned me about 90% of the value of the property and asked me for a 12-year payback period. So when you're looking at a commercial loan, you tend to have loans between the period of 10 to 15 years. So that's why we found a middle ground at 12 years. Then there's rates and taxes, insurance management. Somebody needs to manage the property, manage the tenants, manage the evictions, manage the maintenance, etc. And you don't want to be doing that. You want to buy back your time, right? That's the point of doing this property game. I've also put 5% aside for any maintenance. So 5% of the income goes and sits aside as a maintenance budget in case I need to renovate one of the properties or maybe a geyser burst, etc. So the monthly profit, or what we call cash flow, is 7,800. So every month, assuming I get paid all my rent, etc., I should be walking away with around 7,800 Rand profit, which I know is not financial freedom for anybody, but that kind of income that's additional to whatever you're earning as a salary, that can give you some breathing room, right? That could help you pay your car off or your house off, or it could you could give that to your parents if you're part of the sandwich generation, where you're paying for your kids and for your parents. You could use that to reinvest. So it's just a little bit of extra money coming in every month, and that's why I like this strategy, because it's that recurring income. It's not a large amount of income, but it's a recurring income. Now, what's also interesting about the rental market is that it's obviously a long-term investment. What you'll see here is I projected what the next 15 years will look like with this specific property investment. The green bar is telling you the rent, the red bar is telling you the expenses. Now, in Rosettenville, currently the statistics are saying that between 6 and 10% rental escalation is achievable. So I've used 8%, and you can see in year 1, the first green bar, I'm getting 27,500, and then in year 2, I'm getting 8% more than that, because every year it escalates by 8%. I've used 6.5 as my expense escalation, that's related to inflation. And the reason why the red is not growing as quickly as the green is because my biggest expense, which is my bond, my loan repayment to the investor, is on a fixed interest rate. So you can see my expenses are getting more expensive, but not as quickly as the green. And then after 12 years, I've paid off my investor. The difference between the green and the red is my profit, or what we call cash flow. So here's a visual representation of the cash flow of this deal. You can see in year 1 that the cash flow is 7,800, and then it steadily grows. After year 12, when my loan is repaid, I get a huge chunk of additional cash flow, and by the end of 15 years, this one property will be bringing me in around 93,000 Rand per month, which sounds exciting, and I'm hoping that that time comes quicker rather than later. Now, one of the key things that I learned from my property coach is that you have to manage your cash flow. Now, what I'm going to show you is a visual representation of my portfolio as it stands today. So the first thing that you'll notice there is the purple bar, which is the cash flow for that specific month. That was the first month of the year. The green bar is the rental, the red bar is the expenses. So in month 1 of this year, my income far exceeded my expenses, which meant I was left with a nice fat cash flow of about 30,000 Rand. But then in the second month, you can see how my expenses escalated and they touched pretty much my green bar, which means that I didn't make any cash flow, and that's why the purple bar is so low. Then in the third month, my expenses actually were more expensive than my rent because I didn't have a tenant. I had to renovate the property, and there were multiple things that can cause your expenses to go higher than your income. The third month, it kind of came back, and it was neutral again. And then the fifth month of the year, I lost money again. Now this is where an experienced investor is needed, because you can't panic in these situations, right? The idea is that that first month when you make a big hit, you've got to put some of that money aside because there will be losses. It is very, very natural and normal to lose some money some months. So you can see in the fifth month of this year, I lost about 10,000 Rand in that month. But if I'd managed my cash flow properly and if I'd saved that first month's rental a little bit more, I wouldn't be in a problem. And luckily from the sixth month onwards, things started to stabilize, and I was able to basically get through the year. Now, this is why multiple streams of income are so important, and why I've personally chosen to go for a multi-let, because when you have a multi-let, even if you've got, let's say you've got a multi-let with six tenants, if one tenant can't pay or decides to leave, you've still got 5 income streams. Even if 2 tenants leave, you've still got enough income streams to potentially cover some of your expenses. So that's why I like the multiple let, because you've got multiple people paying off your bond. Let's have a quick look at my latest property investment, which is also in Rosettenville, in an area called Kenilworth. So this is a 6 times 2 bedroom unit. So you'll see my finger now. There's a 2-bed, 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 and then another 2 beds at the bottom. And it's in a nice suburban area. Here I'm walking in with one of my colleagues. You can see on the left, his name is Khapolo. He's a good partner of mine. That is the estate agent on the right, talking them through. And then those are 2 of my students who just wanted to get some education. So I'm taking them through this investment opportunity of mine. And as you can see with the laundry, that this is lived in, right? This is a fully tenanted property, except for this unit that we're going into now. This one is recently renovated. So as you walk in, you can see this is the lounge, and the estate agent's just obviously giving them a bit of background. And here I'm walking into the first bedroom. You can see there's some built-in cupboards. This is where one of the bedrooms would be. Here is a bathroom. It's a nice bath. Here we're walking into the following bedroom. This is the second bed, again built-in cupboards. And here we're ending in the kitchen. So as you can see, it's quite simple. It is not necessarily fancy, but functional, because we are targeting a lower income individual who needs to be able to get by with between 4,000 and 5,000 Rand rent. So now let's quickly run the numbers of this specific deal so I can show you exactly how the finances actually work. Now, I like to use an app called mypropertyapp.online. Have a look here at the URL. Please make a copy and a note of that. This is going to be an instrumental tool towards you becoming a successful investor. There's also numerous tutorial videos on this app if you want to learn how to analyze a buy-to-let or buy-to-flip. So it's essentially a one-stop shop where you can analyze deals, generate investor proposals, and raise finance. So here I'm going to go to analyze a deal. Analyze a buy-to-let. I've already analyzed this deal to save us a little bit of time, but essentially this app will take you through 7 stages, being the area analysis, buying cost, refurb, other costs, finance cost, cash flow, and then summary. So here in the area analysis, I just put some of the details in terms of asking price, offer price, and then of course the rental, the buying costs being transfer and bond registration costs. I put some financing costs in. I'm getting a 90% loan on this one. My cash flow will be about 2,700, and ultimately my return on investment, which the app calculates for me, is 13.5%. It also gives me the debt ratio and the Mo ratio. What's quite cool is that this app can also project your future earnings. So it'll say in your first year you're getting 13.5%, but based on your escalation rates, you can see how the return on investment will grow over time. You can also see a visual representation of the cash flow. So you don't have to be an Excel wizard or even know Excel. Come and use this app, get yourself involved. This is a great tool that'll give you everything you need in terms of analyzing a deal. You'll also be able to see your equity gains. So the green bar is telling you how much the property is appreciating. The red bar is telling you the outstanding bond, and the difference is your equity. And here you can see the curve of how your property actually gets paid off over time. There's also some Mo ratios and debt service coverage ratios. And then lastly, scenarios, where you can see here that if your rental income is 20% more than you expect, your return on investment becomes 28%. Whereas if your rental income is 20% less, you start to lose money. So you can start to do some scenarios, some stress testing. And then lastly, just on this app, you can go here to generate investor proposal, and with a click of a button, just clicking generate detailed proposal document, it will then generate a finance proposal. You can see on the bottom left there that it's currently downloading, and this is something you can take to the bank or to a private investor to help you raise the financing. So very simply, the app basically takes your logo, puts the high-level numbers of the deal into a document. You can also see an introduction of myself. There's some of the amenities included. There's some pictures of the property. The cash flow, it tells you the income, the expenses, the cash flow. It talks about all the costs associated to the property investment. It even pulls the scenarios, the stress tests. So you can go to your investor and say where the risks of the deal are, and finally giving you the return on investment projections and income, expenses, and cash flow. Now, this is the kind of tool that, coupled with the right education, can help you become a professional investor. I hope you enjoyed that and that you learned something that you might not have known before. What I want to encourage you to do is, if you like the content and you want to learn more about how to become financially free through property, go join our online course. On this online course, you're going to learn about the mindset of a successful property investor, some of the key investment strategies, the insider secrets on how to get started. You're going to learn about deal analysis, return on investment, return on equity, gross yield, effective yield, all the financial metrics that you need to know in order to get into property. You're going to learn about the innovative prop tech systems, TPN, Lightstone, My Property app, how to use them. Raising finance using other people's money. The truth is, you don't need money to do property. You don't need your own money. You just need somebody's money. And then legals and structures and much, much more. So please go and check this out. We're doing this in partnership with Financial Freedom Through Property and the author Lawrence Bull. Please go and check it out on www.mypropertyapp.online. Register for your free trial. Go check out the tutorials page. You will see all of the videos, and the education is right there. And until next time, happy investing.